gap is here. So that's consequent encroachment of the opening range gap. If you look at the 1 minute chart, that's real nice right there. Clean, equal highs, straight down right from the opening, so you know what retail wants to do. They want to be short. And we have a new day opening gap low here, just close to that mid gap. So some of the exercises I'm going to show you today, well, I won't show you many of them today. I'll start off with one. I want to ease into it. But each day I'm going to teach you what you can practice with using the lower time frame charts. Now, for folks that don't have sub 1 minute charts, it's the same thing on a 1 minute chart. So I'll kind of do an example of it in the 1 minute chart today, and I'll do an example of it in the 15-second chart so that way you guys can see it and get a baseline going forward. Each day, I'll do several examples based on what the chart and what the market is presenting to me. There will be times where I will say, this is what would look like a fair value gap, so that way you know in advance what I'm talking about. And we'll test using ones that I don't necessarily agree with. So it gives Caleb and all of you a chance to see what it looks like when you're not doing it correctly and how you'll be able to identify it right away. Because there's certain signatures that it should present to you. If the fair value gap is valid, these are the things I personally look for. If they don't have all of them and they have a few of them, you can still practice with it. But if you get an adverse result, don't beat yourself up about it, because they're drills. Drills are just practice. They're practice sessions is all they are. You won't get good at entries until you practice them a lot. You will not know how to buy and sell and add to the positions and pyramid unless you do these very basic ideas. But we got to let the market shake out its initial excitement here. Then we can go here and start clicking some buttons. As you can see, I have it set to one contract. And today I'm going to be doing just primarily the discussion on the mini contract. Tomorrow, I will most likely be rolled over into the December contract. So right now we're trading with the September delivery. Tomorrow, if everything's as I expect it to be, I go to barchart.com. I'll post a picture of it on my community post of my YouTube channel, showing you what I'm looking at and what is the reason why I'm rolling over. Okay, because if you're not familiar with it, it's probably going to be unclear to you, what I'm referring to. So I'm going to show you what it looks like and how I determine when I'm going to roll over. Most everybody else is waiting for their favorite live streamer or the person that they like to follow on social media when they say the rollover. I'm looking for specific numbers to tell me when I'm going to stop worrying about the September contract or what is considered the nearby contract, and I'm going to trade the next month out, which in this case is December. And the symbol for that, if you want to have that handy, it's going to be NQZ, as in zipper 2024. Z is the contract delivery month code for December. All right, some of the things I like to look for is like we went down below this low here, straight shot right from the opening bell. We have all these wicks in here. And generally, even if it is inside of this SIBI here, folks will look at that and think that that's something to go short on. I like the fact that it went down into that volume imbalance right here on the 1 minute chart with this candlestick here. And now I want to see, does it want to go higher to reach back up into end dog here and then maybe get up into the buy side there and see if we can get to mid gap, which is consequent encroachment, that red level up here. I got a little too many lines on the chart for my liking, so let me clean up. Go back into a 15-minute chart, upper left-hand corner. So when I'm coaching Caleb and when I'm trying to teach students, when I used to do one-on-one sessions, I do not teach one-on-one sessions anymore. I did that in the 90s. But what I would do is I would give the ideas of what I want to see in price that would either frame a setup. For instance, if we make another attempt to go lower, first of all, let's do this first. Let's cancel that out. I already outlined that I want to see it fail with this sell side and bounce buy side inefficiency. In other words, some of you, I'm going to maximize just this chart for right now, okay? Most of you may look at this like that and think, okay, it's gone up and it's rebalanced that out. So therefore it should sell off. Well, it can. I don't personally want to see that. I would rather see this one fail. That's what I'd like to see. I would like to see that one fail. Meaning that since we went to the top of it here and here, if you split that inefficiency in half, I want to see it stay in the upper half. If it has any retracements, I don't want to see it go back in the lower half. Okay. So right away, we're talking about how to look for fair value gaps that shouldn't be viewed as a shorting opportunity because you would have been stopped or very close to being stopped out already. Because the rules are whatever the fair value gap is that has the imbalance candle, there's always three. Okay. There's three candles that make a fair value gap. Your eye is being trained, Caleb,